Hey there, do you like gold? I do. Everyone does. So let's talk about gold today. Welcome to the Olymp channel, a place to be if you want to up your trading game. The correlation between supply and demand is the fundamental underlying principle that defines the behavior of the price of gold. If the demand for gold grows, its price also grows. If it falls, its price will likely fall as well. Now, let's get into specifics. Investors consider gold a safe haven asset. They'll buy more gold to store their money in it in times of global geopolitical uncertainties, economic recessions, and crises. For example, the Russia-Ukraine military conflict spiked uncertainty and price volatility in February 2022. As a result, they went for more gold and its price went up. Gold also serves as a way to hedge against inflation. In July 2020, the world's central banks were printing money to mitigate the effects of the pandemic. Investors saw that as an inflationary threat and shifted their funds to gold, pushing its price up. Interest rates are a factor too. When they drop, investors prefer gold to make gains. For example, in April 2023, the US Fed was believed to be preparing a halt in the rate hike cycle. Expecting lower interest-based profits, investors turned to gold, making its price rise once again. Currency movements affect gold as it's priced in US dollars. If the US dollar strengthens against other currencies, the price of gold will likely drop as it becomes more expensive for investors in other countries to buy. Finally, as the world's central banks hold significant reserves of gold, their policies affect its price too. For example, if a central bank announces a plan to sell large amounts of gold, its price will likely drop. You need to consider all these factors and many more when you trade gold long-term. Now, let's look at some short-term approaches to trading gold. US economic news releases, like the US non-farm payroll reports, CPI, GDP, and the US Fed's interest rate announcements, are perfect for trading on news. Usually, if the released figures are better than expected, the price of gold drops, and vice versa. Look at this gold price chart, for example. Do you see that spike? It's from December 13, 2022. On that day, lower than expected US CPI was released, and as you can see, the gold price went through the roof. Trend trading strategies can be used when gold shows strong trends. Switch to longer time frames to check for them. With trend lines and trend indicators like the moving averages or Bollinger Bands, you'll spot the points where you can best buy in an uptrend and sell in a downtrend. You can also trade based on gold's previous highs and lows, as its price tends to reverse at those zones. The RSI indicator can help you find those points. If the RSI goes above 70 and then goes down, it's a sell down signal. If it goes below 30 and then goes back up, it's a buy up signal. These are just a few of the gold trading strategies, and there are many more to consider. Use technical and fundamental analysis, together with all the tools available on the platform, and you will definitely find a strategy that suits you best and helps you make profits trading the ever-shining yellow metal.